Hello, this is Brad Stewart, the Director of Research here with the Investment Management Research Team at DA Davidson. For the past couple of weeks, our group has been looking into how the U.S. consumer is positioned for the holiday spending season and 2026. Today, we're lucky to be joined by Michael Baker, Managing Director, Senior Research Analyst with DA Davidson's Equity Capital Markets team. Michael, thank you for joining us.
Sure, happy to be here.
So, what we've seen or what we've looked at is we kind of feel like this economy is a winner take most, minimal resilience kind of economy. We see, high valuations in stocks. There's been, the big winners, the ones that have really differentiated themselves, have kind of taken most of the market cap inside that space. We see, all sorts of conflicts inside of AI. That's obviously been a huge topic. When it comes to the consumer and the job picture, a lot of people have described this as a K-shaped economy. I know you've talked about it as a need versus want. The consumer's in a need versus want position as they're spending. What have you found in your research and your conversations with management teams that illuminates what's going on with the U.S. consumer and their ability to spend?
Yeah, the consumer is spending. It's not like we're down year over year. I do think we're seeing a little bit less growth than we've seen in the past, and that's our expectation for the holiday season. A solid holiday season, 3.5 to 4% growth, which is strong, but not quite. Last year, the holiday spending was 4.3%, one of the better years we've had. We don't quite think it's that strong. What we're seeing is the consumer is definitely feeling pressure from inflation in needs categories. So that's sort of crowding out some of the wants. Again, that doesn't mean they're not spending, but maybe crowding out a little bit. It's hard to get data on this because of the government shutdown and other things, but it does feel like employment growth has slowed a little bit. And so that's always, to me, historically, the biggest driver to retail sales is the level and strength of employment. That's not to say that employment is down year over year, but we do think the growth in jobs has slowed a little bit. So all that's taking a little bit of a bite out of the consumer. Most consumers still have jobs. Unemployment rate is in the 4% range. So again, they're out spending, but we just think there's a little bit less robustness and a little bit more focused on value. And so that doesn't, in some ways, that means needs versus wants. But there is some discretionary spend, but consumer, as much as ever, is looking for a value, looking for a bargain.
And so is it higher prices? Is it inflation that's constraining consumer spending? And are you seeing it when you say the needs, is it the goods or services side of that? And how is the consumer dealing with that? And how are retailers and the companies that are trying to reach those customers dealing with that?
Yeah, we think it's more about inflation in needs-based products and services, I suppose. But certainly, it's food price inflation has ticked back up. It was way up post-pandemic, came down to the 0 to 1% range. Now we're back up to 2.5, even higher in some categories like beef or whatever. Inflation in healthcare and insurance. These are must-haves. These are things you need: food, healthcare, insurance. You need to own all of those. And so that does just crowd out a little bit more in other areas. So what are retailers doing? Again, they're focusing on value. One of the ways a consumer can focus, or a retailer can help focus on value of all things, is being a little bit tighter, a little bit sharper with their inventory levels. And when a retailer is able to do that, that leads to less markdown risk. So there's no pressure there at the end of the season. So in a way, they can have a little bit less markdown in their initial markups because they're not worried about having to mark things down at the end of the year. And so that enables a retailer to give a little bit better pricing to consumers without having to worry about completely destroying their margin structure.
Are you hearing about any interesting new tools that they're using to manage their inventory, or what are the new ways that management teams are able to better see what they have in stock and meet the customer where they are?
Yeah, it's all about technology and systems and improving those systems. And there's not a retailer out there that's not talking about how they're using AI to better forecast and get the right inventory at the right time in the right store. And I think there is some of that. All that AI stuff, it's in the early innings. But I would just say it's a continued evolution of better systems and better allocations and things that retailers have been doing for years. When I started in this business, and I started working for a retailer, TJ Maxx, 25 years ago, it was done on a green screen, the allocations, and it's just keeps getting better. And AI is just the next evolution. in improving that kind of inventory flow and management.
There's a really interesting trend that we've noticed, which is, for a long time, e-commerce retailers have been pushing towards same day or next day delivery, but some of the more traditional bricks and retail retailers are using that to engage with customers. What do you think the trade-off is that they're thinking about that when they're trying to grow sales versus the margin challenge that they might have from that? And is it really just all about attracting the customer to your brand, or is that the ultimate goal?
Yeah, in a way, it's become the cost of doing business because Amazon stepped it up and went to same day, next day. It wasn't that long ago, 3 years ago maybe, where the bogey was 2 day delivery. Now it's then went to next day. Now it's same day. What retailers have realized, and actually, to me, it's the big unlock in terms of omni-channel retail, is the ability to use their stores as distribution centers. So there certainly is a margin pressure point to same day, next day delivery, but it's probably less than you think because again, retailers are just able to use their stores to do that kind of delivery, and it's actually a huge advantage relative to Amazon or other pure play retailers. So certainly Amazon, doing very well and taking a lot of market share. But to us, it really speaks to the power of the omni-channel model.
So
Uh,
oh, go ahead. I apologize.
I was going to say, thinking way back, of all companies, the two companies that really pioneered that idea of using the stores as distribution centers are Best Buy and Target, which ironically the two companies that are maybe struggling a little bit in this environment, but they were really the two companies that realized first and foremost that our store. There was a time where e-commerce was coming on board and everyone thought stores were going to be a massive liability and you should close every store as quickly as you can. It turns out that was the wrong call, and these stores really are valuable assets, not just for the shopping aspect, but again, as sort of quasi distribution centers.
So as they bring that convenience, and if they can get them to click and collect, it's almost a way of driving traffic to the stores.
Sure. And as a consumer, why wouldn't you shop from a retailer that's an omni-channel model where again you're getting the same delivery, same day, next day, but you can return it easier if you have a problem. If it's a consumer electronics, as an example, you can go back into the store and ask a question or yell at somebody or whatever you need to do. And you're right, while you're there, you might even pick something up, extra that you wouldn't have picked up otherwise. So it's really become a pretty good unlock for the retailers. Part of it was accelerated of all things during the pandemic when it became all about curbside pickup, and a lot of retailers had to stand that up, in a matter of weeks. But that is stuck and really become a competitive advantage for a lot of retailers.
Do you think that speaks to maybe another challenge here? We see sometimes we saw recently in some of the employment data that's been coming out that small private businesses are struggling a little bit more. Is this maybe indicating that scale is becoming a huge advantage? They have the ability to deal with supply chain issues, rejigger their supply chain. They have bargaining power with the products that come into the store, and as a byproduct, they have the opportunity to offer omni-channel, but that might be to the loss of smaller retailers and
You're,
smaller customers.
I wouldn't say that scale is becoming an advantage. I would say that scale has always been the advantage in retail. That is the most important thing I think in retail for a lot of reasons. One, sort of touching on what you said, is just the ability to invest in technology. We talked earlier about investing in AI and all these systems to drive sales. It's easier for Walmart to invest in AI systems and hire AI geniuses or whatever than it is for a local company that has 5 stores because you just can't afford the cost. So retail has always been about scale. That's bad news for the local mom and pop. And if a local mom and pop store is doing something to differentiate, they can survive. But it's an uphill battle.
Yeah. No, it's interesting. So that some people think that AI might be the rebalancing effect, but you think that nothing's changed inside of retail. It's a scale game, and that's with this new technology, it's going to be the same going forward.
You need the dollars to invest in AI, and it's just easier to leverage that over $700 billion in sales, which is what Walmart has versus a smaller company.
And then, as we think about going into 2026, I think an interesting question that's out there. I know it's hard to see how, potential tariffs have moved through and where the inflation is exactly. That got limited government data and everything. But there is a thought that 2026 with tax refund season coming around is going to be an opportunity for retailers to pass on some of those higher prices. Consumers could be flush with cash. Do you get the sense that that is a potential for 2026? And how?
Yeah, I think there are three things that could potentially help retail sales next year. One is the big beautiful bill, and there are some components in there that is going to give a little bit of money back to consumers. So that should help. The second is we think we'll continue to see Fed funds rates come down. If for no other reason, it seems like the administration is going to put a new Fed president in place who's going to be more aggressive with rates, right or wrong. We feel like that's going to happen. And it's, we don't know exactly what that'll do to the long end of the curve, whether rates will long end rates will fall that. But if they do, and you get lower 10-year and lower 30-year mortgage rates, that could drive housing, that could drive autos, that could drive power sports, all those types of things. And then on the tariff front, a lot of it's been put in place already. So we think that we'll see a little bit of continued tariff pressure in the first half of the year, but by this time next year, assuming there's no more incremental tariffs, you never know, but it seems to have calmed down a little bit, that rhetoric. We're going to be up against the tariff impact this year, and it's going to be flat year over year. In other words, I think of tariffs as really impacting pricing and the consumer just because of the timing of the way it all played out in the second half of 2025 and the first half of 2026. But over the full year, it's going to be sort of even in 2026 versus 2025. 2025 is a step up from 2024. So on an incremental basis, you don't have that big of an impact next year. So that we think can help, all else things being equal.
So that speaks to the idea that the consumer's going to be in a little bit better shape in 2026. We've seen a little bit of a trade down effect here, and with the higher end consumer maybe trading down into some of the lower cost retailers. I guess is this an encouraging trend that you see that would actually help the lower end consumer maybe reverse that trade down effect and kind of broaden the participation of all consumers?
Sure, I think it can help the lower end consumer because again, one of the things we just talked about is the impact. I think the impact of tariffs, i.e., inflation, has really crowded out some spending more for the lower end than the higher end. And to the extent that is no longer an incremental year-over-year burden, again, the tariffs aren't going away, but on a year-over-year basis, it should be about the same. That certainly gives some alleviation, I think, to the pocketbooks of the lower end consumer.
Terrific. All right. Well, thank you for spending the time, Michael. I appreciate it.
Sure, happy to be here. Appreciate the good questions.